Welcome back, everybody. Thank you for joining us today. My name is Peter Spina, president of SilverSeek.com. We are very excited to have the pleasure of speaking with Eric Sprott this morning. Eric, thank you for joining us.
Peter, my pleasure. Always happy to sing the praises of people who are making the right suggestion that people own gold and silver.
Thank you very much. Well, I'd like to kick off today's interview and focusing on the silver price and the silver market. We've recently had data come out that the U.S. Silver Eagle Mint has issued a record 40-plus million ounces of coins this year. India's silver imports have now exceeded 4,000 tons and looks to exceed the 5,000-ton record in 2008. And in the meantime, the Silver Trust ETF, SLV, hasn't really seen its holdings decline, unlike gold. But yet the silver price has come down quite significantly. What is going on, and how can this be the case?
Well, Peter, you know, it's all counterintuitive to those of us kind of watching the numbers, right? And I think the data point you referred to, but India is by far the more important data point because, you know, the Indians bought 2,000 tons last year. It looks to me like they were 4,000. I think it was at the end of August, and by my calculation, they imported another 500 tons in September. So I think they're going to hit 6,000 tons, which is an increase of 4,000 tons year over year. Well, the whole silver market's only a 25,000-ton market. So the Indians have come in and essentially bought, 16% of this market that they hadn't formally purchased, and it's all for investment purposes, obviously, not for industrial. You don't increase your consumption by 200% in industrial. And there's not that much silver available for investment. I mean, probably the highest estimate I've ever seen is 50%, and some are down as low as 30%. So you can imagine if a new entrant came in about 15% more silver, and it was all for investment purposes, he has to buy either 50% of all the silver available for investment, or something like 30% if you want to use 50% as your number. And to see silver go down in that environment just blows me away. And I mean, I also agree that the mint sales are very strong. You will have noted that, you know, of course, they're going to stop selling, I think, on December 9th, and they're going to have a 35-day window when they're not going to sell any. This is the standard practice that they don't want the number this year to be too big, so we're going to cut it off. And you know, it should be interesting to anyone listening to this that people continue to buy silver in massive quantities. I mean, the fact that we might end up at, maybe 42 million for the year or something like that. I mean, there's only something like 800 million ounces available. We're hitting a new record in purchases by American citizens with a shortened selling season, if you will. And furthermore, we're putting as much money into silver coins as we're putting into gold coins, based on the mint statistics, which means people are buying 60 times more physical ounces of silver than gold, yet we all know that we only produce 11 times more ounces of silver than gold on a world basis. So these trends, they can't continue. The numbers just suggest that you can't have India buying an extra 15% of the market and people in the U.S. or people buying from the U.S. Mint putting the same amount of money into silver as gold. Those things cannot continue to happen and have the price of silver stay down.
So the price is predominantly ruled and set by the paper silver market, and it doesn't really reflect these demand statistics that you're reflecting. So how long can this continue on? And does this paper silver market, is it like the banking system? Is it a fractional system?
Well, it is. I mean, the one thing we all agree on is on any particular day, somebody selling in the paper market can make the price do anything they want. It's, of course, when you're asked for delivery of something that you sold that you didn't have that you end up with an issue. And with the sort of machinations we've seen going on in the silver market, particularly when it was up at 49.50, we used to trade, 1.3 billion ounces of paper in a day. When we only mine 800 million ounces, I mean, it just was incredible that the people selling those 1.3 billion ounces obviously had no way whatsoever to supply those ounces. And someday somebody's going to call these people on this silver. And we've had good deliveries on COMEX this year. It's just sort of interesting to watch that almost every month as the month unfolds, even though there's initial indications that people are going to take X in delivery, it always ends up about being 2X. Some months are, of course, way bigger than other months, but it just shows that there's a great interest in silver here. I'm always amazed to think that, one person or one country with $20 billion could own all the remaining silver that's available for sale. I mean, what's $20 billion in today's day and age? It's nothing. So I think a reset is coming sometime here. I suspect that some of the guys in these paper markets are, I call them cowboys now. They just think they can get away with this forever, and they can until finally someone calls them on it and takes delivery, and a guy can't make delivery, and then I think all hell will break loose. And I suspect that's likely to happen soon. I feel more strongly about that in the gold market than I do in the silver market, because I see all the machinations going on in the gold market where we see this data from China that they just import massive amounts of gold. And again, just like the Indians, the Chinese over the last 2 years have consumed an extra 25% of the gold market, and the price goes down. I mean, it's just unheard of. Somewhere along the line, it's going to break, and I don't know when somebody takes the cowboys on, but that day cannot be far away.
And with that, the silver companies and silver miners and silver stocks have come down a lot more than the silver price has, and you've seemed to be taking advantage of that by switching from some silver into silver stocks. Is that still your strategy? Are you still looking to get better leverage in the silver miners?
Yeah, I have sold physical metals to get involved in the precious metal stocks, both gold and silver stocks, on the assumption that we're going to see a very, very large rise in the price of both gold and silver. And I think gold can double off its low from June of roughly $1,200. I think silver can triple off its low and get more closer to $60. And of course, the leverage in the stocks is always 2 to 3 times the change in the price of the metal at a minimum. And I suspect if we all get, if we're all in an environment where, my God, the price of gold is 2,000, we realize, oh, we were in a new bull market, we could get outsized returns on that. And of course, some of the smaller producers have been beaten up unmercilessly, and I think there's potential for 1,000% gains here in the next year, should our projections for the prices be correct.
And what kind of projections do you have for the price of silver?
Well, as I mentioned, I think it can go to $60 within a year, and I think gold can go to $2,400 within a year with the data that we're looking at. I mean, the demand is there for sure. And sooner or later, the guys that think they can run things in the paper market are going to find out that they can't. I mean, I think gold is as tight as can be. Thank God for the gold market that they were able to squeeze 700 tons out of the ETFs. That's going to be a one-off. It's not going to happen again. And 700 tons, that increases the supply by the mining supply that's available to the world by 33%. Well, it won't be there next year, but the demand will be there. In fact, the demand, as these prices go lower, just keeps going up all the time. So imagine if we brought India back into the market, who used to take down about 80 tons a month, and for the last few months has not taken that down. I mean, there just isn't enough monthly production to sate the total of Hong Kong, China, and India, let alone the rest of the world. So I think something's going to give here any day now.
And will they be able to continue to block these imports in India with, I believe it's that 10% import tax and other restrictions?
15% now, and I heard that there was a new rule came in this week. I mean, my own view is that the central banks were running out of gold. They orchestrated the sell-off in the first half of this year. The intention was to liquidate the GLD. The unfortunate consequence to them was they ignited this demand for gold. And as you know, I think there was 1 month when China bought 168 tons. There's obviously been months when China collectively, between their own production and imports and so on, is at that level. I mean, we could see 300 tons in 2 countries. And we only mine about, including China, we mine probably about 2,100 tons a month. So between those 210 tons a month. So between those 2 countries, they could have been taken down 300 tons if they were left to their own devices. And I think the central banks orchestrated their raids, and then they went to the Indian central banks and said, you've got to stop people from buying. We don't have any gold left. And that guy has come up with more maneuvers to stop gold imports into his country, whether it's, the 2% tax, 4%, 6%, 8%, 10%, 15%, the export conflict. I mean, that guy's come up with more rules to stop gold importation into his country. It's like he's on an incredible mission, and all on the basis that it supposedly helps the rupee because his trade balance gets blown out by gold exports. And my simple solution to that is just report your trade deficit pre and post gold imports. Everybody knows that gold imports is hardly a sign of weakness. It's a sign of strength for you. It's not like importing oil that you consume the next day or food that you consume the next day. It's a form of saving. So I don't get into this rhetoric that the purchasing of gold by Indians, which, by the way, benefited that country the most over the last 10 years, with the price of gold having gone up as much as it did. And now they're trying to get people not to buy gold. I mean, it just goes so counter to everything that everyone should expect over there. And I think it was on the instructions of the Western central banks who are trying to protect their currencies that he has been forced to take that drastic action. Of course, you can't go to the Chinese and say that. They'd probably double their demand. So it's unfortunate that it happened, and in an amazing way, it's sort of interesting that there was so little buying going on in India that we held in here. But it's the Chinese that have taken it up. If we ever let the Indians back in the market, I think you'll see some pretty dramatic fireworks in the both gold and silver markets. And thank God that they're already making the move into silver. In fact, if they put as much into silver as they might want to put into gold that they can't put in the second half of this year, they'd have to buy 2 years of mine supply in silver just to make up for the gold they can't buy. So that's why that should be very exciting for silver here. I think the the Indians want to own hard assets. They don't want to own the rupee. And if silver is the de facto guy next in line, I think we'll see some pretty good numbers out of India, which we've already seen.
And coming back to the mining supply, with the silver price nearing $20 an ounce, we've seen some mines reduce production, some mines even closing or deferring projects. Yeah. I believe Steve St. Angelo on this site mentioned that Mexican silver production is down about 10% this year. Right. Is this going to cause some major supply issues the longer this obviously is a pro-bullish silver issue, having this down there? And
it's a great question, Peter. And it's funny. I've never even thought of the supply side, because I look at the demand side, and I see numbers like up 100%, up 50%, up this, up that, and oh my God, the demand is just overwhelming. Okay, and I never have to worry about if supply's down 5%. Who cares? If the demand side's up 50s and hundreds, that should take care of itself. But to your question, there's no doubt that precious metals production is going down, and it'll go down this year, and it'll go down next year, and it's probably going to go down in 15. It's going to keep going down until the price recovers here, because all the companies have been forced to change their demeanor here in terms of exploration, development, and capex, and we've seen it all over the place, like the whole Pascua-Lama thing that was supposed to produce, I forget what the number was, 25 million ounces of silver. Well, that's not going to hit the market now. And there's lots of companies doing this en masse. And so, yes, we're going to see lower supply going forward. And if the demand holds up, and if we ever let the Indians back in the market, I mean, there's no doubt in my mind, there's already a shortage. We don't need supply to go down, but I think to your question, yes, supply is going to go down for sure.
And what can silver or gold companies do? Can they be proactive in any ways to fight against the paper silver price manipulation and depress silver price?
Well, it's been very tough to get to the CEOs of the gold and silver stocks, with some exceptions for sure, okay? I mean, I can point to First Majestic and Endeavor Silver and people like that who from time to time delay their silver shipments when they realize this price is low. But as you probably know, I wrote an open letter to the World Gold Council wherein I criticized them for the data that they use, which is the same data provided for silver as in gold, okay? And I just don't believe the data. I think the data is so grossly misleading I can't even begin to tell you. And I've had some resonation with some of the CEOs of the gold companies. Like, I've literally gone to some of these CEOs and said, look, I've written this article. You're on the World Gold Council. Can we not see to it? And I know that there's always been some sentiment there that the data is flawed. And would you quit using it? like try to do something else. And I hope to have ongoing discussions with the World Gold Council on that. The data I use is basically I use this net import, net export data. I have no idea where they come up with these recycling numbers. I don't think anybody knows where they come up with the recycling numbers. I do have no idea where they come up with the investment numbers. And they always have supply equaling demand, for the last 13 years. Well, the price of gold went from 250 to 1900. I can tell you right now, I don't think supply equal demand, okay? But that's what GFMS has said every year, because they just plug a number in for investment. So I don't like the way it's presented. I think the World Gold Council can do a much better job of analyzing what goes on in individual countries. And if you could probably take 10 countries, as I took only 5 or 6, and said, well, I could see demand way beyond supply just looking at 5 countries. Imagine if I put all 180 countries in there. Not the data on all 180 countries, and data is tough to come by. It's even more difficult in silver in my mind. But I have no doubt that the supply is way beyond, demand is way beyond the supply numbers, and hopefully we can get the World Gold Council to go there. I mean, I would challenge the World Gold Council to explain to me how anybody can come in and buy 25% of any market and have the price go down. It's unheard of. And yet it happened in gold, and the Indians come in and buy 16% of the silver market 1 year, and the price goes down. I mean, it's just so counterintuitive that something's amiss in the calculations. So hopefully we can right that ship.
The underlying reason, one of the main reasons for investing in gold and silver, I believe your premise would be that it comes down to the U.S. dollar, to paper currencies, to this big credit bubble, debt issue that we have out there. What will be the tipping point? How much longer can they continue to manage in the U.S., say, $17 trillion in debt, and so on? When will that?
Sure. Well, Peter, every day we get something new that happens, right? And 2 weeks ago was somebody speaking out in China saying, we got to de-Americanize. I think was the term he used in the foreign currencies. I'm reading an article this morning about how somebody in the political arena in Russia said we should ban ownership of all U.S. dollars in banks, because we all know the currency will be absolutely worthless by 2017. Why he picked that number, I have no idea, but that's what he said, okay? And I have certainly on many occasions spoken about the fiscal or the financial situation that the U.S. has itself in, and it's not just the $1 trillion deficit. That's the cash deficit. There's also the entitlement deficit, which the U.S. Treasury publishes every year. Not that you'll ever see it in the mainstream media, but they do publish the number. And the combined entitlement and cash deficit is well north of $5 trillion a year. And it's been estimated that the present value of the unfunded liability is between 60 and 80 trillion, and that the future value is something like 200 trillion of derivatives. So put yourself in a position of a government that has 3 million of revenue, that ends up with a deficit of 3 trillion of revenue, has a deficit of 700 billion, and has these entitlements that are growing, that where there's no plan to deal with it. And I analogize between what happened in Detroit. And most people probably would agree 10 years ago that Detroit was broke, and 9 and 8 and 7 and 6. And finally, 10 years later, they announced they're broke, which we all knew was coming. But it's not just that they announced they're broke. It's what they said they would pay to the pensioner now that they finally declared bankruptcy. And I believe the number that they suggested is the pensioner will get 16 cents on the dollar of what his pension was. Now let's move that to the U.S. that doesn't even have a Social Security plan. What is going to happen when the rubber finally meets the road and someone has to say, we can't pay these pensions, and maybe we'll have to do a Detroit. You're only going to get 20% of what you thought you were going to get. And, of course, the longer they leave it, just like Detroit, the worse it will get. If Detroit would have made the move 10 years ago, maybe it would have been 50 cents in the dollar or 70 cents in the dollar. But everybody dithered because it wasn't a cash cost at the time, but it was a future obligation whose present value kept increasing as it was staring them in the face, and finally they had to do something about it. And the same will be true of the United States of America and Japan and probably most countries, because everybody's underfunded. So that's why I think that people shouldn't be so complacent about stock values when we know that most things are manipulated, including the bond market, LIBOR, the swaps market, probably the gold and silver market. I wouldn't be surprised that certain entities have a hand in the stock market here because they all use it as their gauge of how wonderful things are, even though from an economic point of view, we know it's not getting better for people. It's getting worse, and that's just documented every day when you look at the food stamp count, the disability count, the people that are not in the labor force. I mean, the numbers are appalling, to say the least. So if you want to believe in the dream that, QE is going to work, even one of the former Fed governors came out just yesterday and said, well, I apologize to America for us having done this because it obviously didn't work. It helped the banks, but it didn't help the guy in the street. So that's the primary reason for me believing that the salvation is in gold and silver, and people should focus in on those products to the detriment of all other products, because that's the one thing that will survive. It will hold its purchasing power better than any other investment. And most people have already forgotten that it went up over 700% in the last decade. And it's only because it's come down here from 1950 to 1200 or 1300 that everyone, it's over for gold. I don't think it's over for gold for 1 second. The data is more compelling today than it's ever been.
Will this be a quick thing when this unravels? Will it be something we wake up one morning and the U.S. dollar has been devalued by 20, 30, 40%, or we wake up with capital control restrictions?
Peter, I don't know the answer to that. It's kind of like the people in Detroit. What do they wake up to one day? We're bankrupt. That's what they woke up to. We're bankrupt. You're going to get 16 cents on the dollar. I mean, if I'm going to use that as some kind of analogy. But someday, somebody's going to have to make the move here and say, we cannot deal with these entitlements, whether it's Medicare, Medicaid, Social Security, civil service pension plans. It's going to happen. It's so easy to predict. It's like child's play. So it's going to happen. I don't know, because you got the printing press, you can, keep deferring it somehow, but the obligations don't go away. In fact, they mount every year, and they're mounting at such a pace that somebody with $3 trillion in revenue can't be even imagined to fund an extra $6 trillion a year or $7 trillion a year or $8 trillion a year as we get, as the population gets older and some of these entitlements come due. They'll just go up in present value all the time. So it's going to fail. I think if people can take the longer-term view, that gold and silver are going to work out. That I do know. Yes, there might have been some great incentive for the central banks to bash gold and silver here because I personally have believed they've run out of gold. Was my whole assumption. I've written a number of articles on it, and that they incited this decline in order to free up gold from the ETFs. But it's not going to happen again. They're running out of bullets, and I'm happy to see the COMEX inventories in gold in particular continue to go down. I'm glad to see the influence of China increasing almost by the month. So our day is coming.
Well, thank you for those insights. And as we wrap up, I just want to ask just a kind of follow-up question to, being prepared for this outcome. Is there anything else that you may want to recommend to listeners outside of just investing in gold and silver, in the metals or the miners? What else can they do to prepare?
Yeah. Peter, I've never kind of gone to the extreme in the sense of, say, storing food and fuel and water and things like that. But trust me, it's always in your mind, okay? It is in your mind that you can have a system shut down and all of a sudden there's nothing available. So I think that people, it doesn't cost much to have some food stored away. You put a couple of $1,000 into food and maybe you can get along for 6 months if we're talking cheap canned food or something. So I think that people should be aware of those things and make your own plans. Just assume that it doesn't work because, if it doesn't work, you could get a bank failure very readily. And then, of course, the whole financial system kind of shuts down as it nearly did in '08. I mean, we're within hours of it shutting down. So yes, I think people should also consider. I'm kind of no expert in exactly what they should do because I spend more time looking at the precious metals market than I do the other things in life that one should do. But I think there are other things in life they should do, and I'm sure there's lots of sites where people can go to figure out what's the minimum that they should do in case they imagine a financial catastrophe.
Mm-hmm. Well, with this pullback in precious metal prices, this should be a fantastic opportunity to be accumulating and buying. And with that, I was wondering if you could share with our listeners ways that they may be able to invest with you through Sprott Asset Management, or also with buying metals through Sprott Money.
Yeah. Well, we have, as you know, we have the 3 trusts listed on the NYSE. We have the Silver Trust, the Gold Trust, and the Platinum and Palladium Trust. And they're all excellent investments. Anybody can redeem them for gold, so they're great ways to play the market. Of course, people who want to own some physical gold, we have a website called Sprott Money that sells both gold, silver, platinum coins. And I would always encourage everyone to own some of those. We also have funds that specifically invest in precious metal stocks, specifically in silver stocks. And my personal view is that's what's going to be the most interesting thing going forward here, is that the stocks could provide us with just a monumental return here over a very short time. So that's why, on behalf of my clients, I've been a seller of the precious metals to move into the stocks here, and I just hope it comes together. I fully expect it will come together. So that's a various array of things that people can do to participate.
Okay. Well, Eric, thank you very much for your time and joining us today. We appreciate your insights, and we hope to have you back in the near future for some updates.
Okay, Peter, my pleasure. All the best to you.
You too. Thank you.